Hey, good morning, everybody. I want to thank you for joining us today. It's Monday. Hey, back to school day for most of the kids out there to head off to school. And again, I want to thank you for joining us. And hey, if you're getting something out of this, please like and share this video with your friends and family. I really would appreciate it. I do want to remind you of a couple of things, but one is as we get ready for the week, not much happening today. Other than the markets are moving up and down, vacillating quite a bit. But I want to remind you again of the free report we have on retirement strategies. Folks, remember that retirement is a one and done kind of deal. We don't get any do-overs when it comes to retirement. So you need to make sure you've got a plan in place that's going to get you not just to retirement, but through retirement. And that's what we do here at Statler Financial. Got this free report for you called Retirement Strategies. All you have to do is text retirement to 863-285-3850. Get your free report. Hey, here on Facebook, you can click the link right above this video and it'll be sent right to you. Hey, thanks for joining us. Dave will be with us here in just a few moments.
38 here, 22 before 9. First day of school for the school kids. But we try to keep up a 52-week program of education here as to what to do with your money and what's going on with your money every morning. Let's check in on Wall Street. We're going downtown to the offices of Statler Financial Services. Phillip Statler is on the line this morning. Phillip, good morning.
Hey, good morning, Dave, and welcome everybody to the first day of school. I'm sure there's some happy people and some unhappy people out there right now.
Yeah, one of the school crossing guards was asking me to just make sure that everybody knows that we want you to watch out for those crossings, watch out for the school buses, and for folks that drive through Sun and Lake, every morning I want you to yell, "Hi, Wilbur," because that's the name of the crossing guard at the traffic circle at Sun and Lake Boulevard in Ponce de Leon, and I appreciate him keeping the kids in my neighborhood safe as well. Besides, I'm just waiting for somebody to say Wilbur and get the guy mad at me, right? You know, we were talking before we went on the air. It's a slow news day today, but it is not a slow news day over in Hong Kong, where they've got something going on that almost looks like the old college campus protests in the 60s. I mean, they're throwing junk, they're trashing buildings, and they shut down the airport. And our futures market evidently noticed about 1 a.m., and the Dow futures slid from about 100 points positive to 200 points negative inside of about an hour and 20 minutes. A 300-point drop on the futures gives a pretty good idea just how much international trade and international events can affect our money, doesn't it?
Oh, it really does, Dave. You know, we are on a world economy, and you know, Hong Kong and that area over there really it does play a big role in the whole overall markets. And so and I think they probably believe that that could lead to more unrest. And so, yeah, them closing the airport was, I mean, that's a pretty big deal when you think that they closed the airport because of the unrest. And so that's got to be driving some fear.
Oh, yeah, there's a running ton of different fallout levels. Number one, Hong Kong is a discrete entity, is a major financial center that affects our money. Add into the fact that it's mainland China that is, that's clamping down on Hong Kong. Could that result in our putting more sanctions and more tariffs on China as more leverage to get them to ease up onto Hong Kong? There's about 87 different moving parts in that equation. So the financial markets are watching the Hong Kong unrest probably even more than the mainstream news people are.
Yeah, I think so. I mean, you know, they're just really taking a big look at it to see how's it going to end up and you know, what's really driving it and can they really get it under control? That's probably the big question.
And it doesn't look like there's going to be a lot of control exercised anytime soon, because the headlines I'm hearing out of Hong Kong is that it's just getting owlier by the minute over there. We mentioned that impacts upon our stock trading, and one of the things that it really changes is what's happening to the big money people that are throwing equities around, and where are they putting their money? When we started talking, my delayed quote had the 10-year Treasury bonds at about a flat level from yesterday, but even as we spoke, we watched the interest rate and the yield on 10-year Treasury bills down by about 7 basis points inside of a matter of minutes. yeah, they're taking money out of equities this morning and they're going where they're safe, aren't they?
They really are. Again, it's a whole idea of seeking safety, whether you make anything or not. In the U.S. Treasury, you're not going to lose money. So they're moving money from the markets, which seem to be somewhat volatile this morning, and last week. Let's face it, they were pretty volatile last week too. So they've decided to move money out of the market into the 10-year Treasury. They'd rather it be there making very little than losing.
Understood. And we talk about interest rates and whatnot. Just as a complete sidebar, but there was a feature article came up on one of my tip sheets, and we both saw there's a bank in Denmark that is now offering a negative interest rate on mortgages. Imagine the notion, hey, we'll pay you to buy a home. Now that's a symbol of declining interest rates if I've ever seen it.
Well, it is, and that's it lets you know that there's why is that really happening? But if you look at other countries, some of the other countries have negative yields within their government bonds themselves.
And that's been the case now for better part of 10 years for some of the European countries. So when we whine about lousy interest rates on our side of the pond, we got it good compared to some of the European bonds.
Well, yeah, and that's why I think I was looking at some dividend yields this morning, Dave, as some earnings or some dividends got declared. I found it interesting, Mr. Icahn, who has his own enterprise, his company basically buys other companies, but kind of like Berkshire Hathaway, Icahn has his own thing, and you can actually buy stock in his company who buys other companies, and it has a yield right now, a dividend yield of 10.6%.
Wow.
Yeah.
I was proud of the one dividend stock I've held on to over the year, yielding about 3.5%, 4%. That was pretty good. Somebody's paying 10% dividend rates.
Based on the current stock price, yes. So I thought that was kind of interesting. ExxonMobil, I mean that's a good Fortune 500 company. Has a dividend yield right now based on the current price of 4.8%.
It rather makes one say a little bit of risk is worth taking, and with the emphasis on a little, right?
Well, yeah, and if you want the cash flow and you don't really care about what happens with the price of stock because you're not going to sell it, you're just going to take the cash flow off the dividend. That's a pretty good yield based on the current stock price. Obviously, you got to look at that in several different avenues, right? You don't want to just blindly be investing in a stock for the dividend and not understand what all the ramifications could be.
Absolutely. And that kind of addresses the notion of something that you and I have talked about on and off for years now, that depending upon your station in life and how many years before you retire, you have different strategies all the way down the line. If income stocks are part of a person's portfolio, and as you say, they don't necessarily care about the principal for a short period of time, that dividend looks awful darned inviting. But on the other hand, if you're 62 years old, pure dividend stocks are fine, but you got to look at the principal value too and what the future on that lies.
That's right, because you don't ever know when you might need to dip into some of that principal for medical or other issues that may arise in retirement.
Absolutely. It's going to be a quiet news week this week. It is a quiet day to start out for the earnings season reports because it's a Monday. Anything on the macro side of the fence likely to affect us this week? It seems to me that we're about due to get the minutes from the Federal Reserve meeting from a couple of weeks ago.
I did not see that. I think that may be the next week, Dave. I see that we have tomorrow, we've got CPI comes out, and then Wednesday, we're going to have export and import prices. Thursday's going to be a big day. Thursday, we've got initial claims, New York Empire State Manufacturing Index. We've got some non-farm productivity reports coming out. And we have retail sales. That's going to be the big one on Thursday. And then come Friday, we've got some of the housing stuff, building permits and housing starts come out on Friday.
My bet is the retail number is probably going to be the biggest market mover of the week, given the news items we had on Sears and Penny's and some of the other brick and mortar last week.
Yeah, I think so. I mean, all those things seem to be struggling and not really making much headway.
A good number on retail sales would probably help confidence in the brick and mortar retailers, and a bad number would simply make it a little bit harder for them to make a buck. You said we have one stock market report. This one's actually kind of interesting because they supply food to a lot of restaurants.
Yeah, they do. Cisco Corp, big food services company. They had a pretty good quarter, at least on earnings per share. They beat the street by about 4 cents a share there, and then but their sales missed a little bit, not by much, but they did miss a little bit on sales. However, sales were up compared to last year, this same quarter. And sales don't seem to be bothering them a whole lot because they're up about 3.25% this morning.
Kind of nice to see green ink on somebody because things don't look very good when we get to quantify the futures. Setting the table for the morning, Friday's close was negative on Wall Street. Not monster, but it was negative. Dow was down 90 points, which in the context of the week we had really isn't a monster change. Standard & Poor's is down about 0.66%, down 19.5. NASDAQ did lose a full percentage point. It was down 80 on Friday. Things were looking pretty good this morning until about 2 a.m., and then everything went south on it. 45 minutes before we opened, Phillip. What do we look like?
Well, it did go south early this morning. It has made some improvements this morning since then, but it's still going to be big time in the red, pretty much 0.5% or better across the board. The Dow is down 137 points. The S&P 500 is down $15.70, and the NASDAQ's down 47. Gold and silver up, silver not by much. Gold's up 0.5% to $1,516 an ounce. We've got crude oil heading down this morning from Friday's close to $54.24 a barrel. And like I said, we had interest rates at about 1.68 right now.
Not a fun number for people that are into holding on to bonds. World market mixed over in Asia. Kind of interesting. The Nikkei over in Japan was actually up this morning. No big surprise to anybody. The Chinese markets, Hong Kong and the Chinese mainland markets, all were off considerably. Europe is getting nervous, so they're trading down this morning too. Phillip, somebody needs stability in their retirement. Like we were saying, different strategies, different ages, different sizes of the nest egg. Solid advice needed. How do I find you to get an appointment?
Well, Dave, one of the things is that I think it's important that people have some strategies in place, and a retirement strategy goes a long way to do that. And we put together our free report on retirement strategies, 5 specific strategies I think people need to look at. They can text their retirement to 863-285-3815. And then you can always call our office. It's a little different number, 382-0037, to schedule your no obligation financial x-ray analysis of your current portfolio to make sure you don't have too much risk sitting there, especially if you're heading into retirement. And then join us every weekend for the Statler Financial Radio Show, 6 a.m. and noon on Saturday, 10 a.m. Sunday morning on News Talk 730 a.m.
All righty. We stream that station at newstalk730am.com, just like we do this one at 1057lightfm.com. It's getting kind of wordy to tell everybody where to find us, isn't it?
It is, but we're glad we're out there everywhere.
Always more than happy for that. Phillip, thank you so much. We'll catch you tomorrow morning, all right?
All right, you have a great one. I'll talk to you tomorrow.
Take care, my friend. It's 105.7 Light FM and Statler Financial Services, Phillip Statler.
Hey, folks, I want to thank you again for joining us and remind you about our free report on retirement strategies. Text retirement to 863-285-3815. Thanks for joining us. I really appreciate it. Like our page on Facebook, Statler Financial Services. I look forward to talking to you again tomorrow morning.